Hey everybody, it's Michael Robbins here. Hey everybody, it's Michael Robbins, early morning, June 9th, 2020. And as we're coming through the coronavirus pandemic and the protests, it has been an incredibly volatile market. And nobody knows where it's going from here, but I'm sure when we look back at 2020, our vision will also be so, and it'll make a lot more sense. So, come over here to Yahoo Finance, bull bear. It's like, what is going on? We've you'll see some articles that we're now officially in a recession, and of course the job losses have been really significant. Over here on Market Watch, it's going through just how the market has been going up and down through these things, and it's conclusive to say that stocks are now in a bull market, whereas we're also getting the headlines that we're now officially in a recession. But of course, an official recession speaks to economic growth, and that's not necessarily tied to stock market performance. If we come back over here, I had the chart up. The main headline is that the S&P is back to where it started at the beginning of the year, and yet you still have some people saying that there is a second wave that's coming, and see, this is kind of a misnomer, right? It says round two, biggest risk to U.S. economy, and actually, when you scroll down through it, that's not what it says. It says that there still may be could pose a serious threat, but that's not the same as it being a biggest or greater risk than what we've already gone through. Let's see what else we have here over on Seeking Alpha. Again, you do get you do get the mixed messages. You've got some folks saying this is not a fake rally, and this one over here, unfortunately, is not coming up yet. But you can see, don't get too comfortable. The next wave is coming. So we've had some really strong market momentum recently, that's certainly making the bears less reliable. But given the fact that this is unprecedented, shutting down so many retailers and parts of the economy just to restart it again. It hasn't been done before, and we don't know how challenging or how easy that's going to be. But yes, if you do say year to date on S&P, you come over here, around 3,200, and sure enough, here we are again, just where we started, January 1. Right over here, this bear is saying it's really the Fed is just printing more money, and the Fed's balance sheets are unrealistic, and market participants have been complacent, solely focused on positive factors, and then yet come back over here also on Seeking Alpha. This is not a fake rally. that the market strides point to a coming economic rebound. Key industries are genuinely improving. I think that the word FOMO comes up again, fear of missing out. If a lot of this buying is being being triggered by expectations of getting back to where we were. Well, if that's true, here we are. We're back to where we started at the beginning of the year. We don't know where it's going from here, but the amount of time and consolidation up here is really starting to be impressive. You would expect if this was a false bull market here that we would see further declines. But note that this came down 30% to begin with. That's a pretty big chunk, and this bear rally or bull rally may be quite warranted. Again, Nasdaq also erased its losses. Look at that chart, incredible, just really incredible. What the fear has done. So. Yeah. Interestingly, after this today, the futures are a bit off. We've had quite a few strong days, so yeah, these are coming down a bit, but that could just be some profit taking. Well, well, yet to see, but. Making a record here for future historians who might wonder what the hell were we thinking during this coronavirus pandemic and the way that the market has responded. So I've attempted to capture some of that, and we'll see you next time.